They had been managing my land for 11 years before I knew I owned it. Not adjacent to it, not a portion of it, all of it. 417 acres of mixed timber, creek bottom, and open pasture in Callaway County, Kentucky that my great-uncle Silas had purchased in 3 separate transactions between 1947 and 1959, and that had passed, through a chain of inheritance that nobody in my family had tracked carefully enough, to my grandmother, then to my mother, then to me. Through a series of deaths and estates that had been administered with the specific informality that rural Kentucky family property sometimes receives, meaning everyone understood that the land belonged to the family and nobody had filed the paperwork to establish precisely which part of the family it belonged to at any given moment. The Callaway Pines HOA had been incorporated in 2009. It had built 38 homes on my land between 2009 and 2016. It had collected dues from those 38 families for 11 years. It had maintained roads on my land, managed common areas on my land, operated a community pond on my land, and sent annual letters to an address in Paducah that had once been my grandmother's and was now unoccupied, informing the occupant that their ground lease payments were current and that the HOA appreciated their continued partnership. The ground lease was real. Silas had executed it in 2008, 1 year before he died, with a developer named Howard Giles who had approached him about building a retirement community on the southern portion of the 417 acres. The lease had been properly recorded at Callaway County. It had a 50-year term. It had a ground rent of $600 per acre on the 212 acres covered by the lease, $127,200 annually. It had been paid to a post office box in Paducah that nobody in my family had known existed for 11 years. The checks had been deposited into an account that nobody in my family had known existed for 11 years. The account had accumulated as of the date I found the post office box key in a cedar chest in my mother's attic, $1,406,000. My name is Delia Vance. I am 43 years old. I am a forensic accountant. I find money that people have lost track of, money that has been misdirected, money that exists in accounts and instruments that the people entitled to it do not know to look for. I have been doing this work for 17 years. I found my own family's money in my mother's attic on a Saturday afternoon in November 2021, inside a cedar chest, inside an envelope, with a key and a handwritten note from Silas that said the details are at the box and the account number is on the key tag. Comment below where you are watching from, because this story ends with a family receiving $1,406,000 in accumulated ground rent, a ground lease renegotiated to current market rates, 38 families whose homes were secured through a proper legal resolution, and a developer who had been collecting ground rent payments on behalf of a family he could not locate for 11 years, and had continued to do so honestly into an account he had never touched. That last part surprised me more than anything else in the case. Silas Vance had been born in Callaway County, Kentucky in 1921, and had spent most of his life acquiring land in the specific methodical way of someone who understood that land was the only asset that did not depreciate, spoil, or lose value to inflation if you maintained it properly and held it long enough. He had purchased his first 40 acres in 1947 with savings from his work as a machinist at a manufacturing plant in Murray. He had added a second parcel, 112 acres of creek bottom, in 1953 when a neighboring farmer's estate was liquidated and Silas had the cash available. The third and largest acquisition, 265 acres of mixed timber and pasture on the southern ridge of the county, had come in 1959 when Silas had traded the 40-acre parcel plus cash for the larger land, a transaction that had required careful arithmetic and the kind of patience that comes from knowing what you want and being willing to wait for the right circumstances to get it. The 417 acres had been in Silas's name from 1959 until his death in 2009. He had never married. He had no children. His heir was his sister Loretta, my grandmother, who had been listed in a will that Silas had drafted in 2004 with the assistance of an attorney in Murray. The will had been probated in Callaway County in 2009. The land had passed to Loretta. Loretta had died in 2014, leaving her estate to my mother. My mother had died in 2019, leaving her estate to me. Each of these transfers had been processed through probate, but the probate of each estate had been conducted by attorneys who had identified the land holdings based on what was in the estate files, rather than conducting independent title research. And what had been in each estate file was a description of the property sufficient for probate purposes, but not sufficient to trigger a full title examination. The result was that the 417 acres had been transferred through 3 estates, with everyone understanding that the family owned land in Callaway County, but without anyone sitting down with the full chain of title and the recorded instruments to understand exactly what the land was, what encumbrances it carried, and what financial arrangements had been made regarding it. The ground lease that Silas had executed with Howard Giles in 2008, 1 year before his death, had been recorded at Callaway County in Deed Book 714, page 42. It was in the chain of title. It would have appeared in any title search. No title search had been conducted after Silas's death because no title search had seemed necessary. The family knew they owned land in Callaway County. The ground lease payments were being made to the post office box Silas had established and deposited into the account Silas had set up. Nobody in the family had known about the post office box or the account because Silas had not told anyone while he was alive. And after his death, the attorney who probated his estate had not found the box or the account in the estate documentation, because the box key and the account information had been in the cedar chest in the attic of the house in Paducah that Loretta had inherited along with the land. And the cedar chest had not been examined carefully during the estate process, because cedar chests in family attics contain an undifferentiated mixture of important documents and decades of accumulated sentiment, and the people administering estates are generally looking for specific things rather than reading everything. I found the key on a Saturday in November 2021 while I was clearing my mother's attic in preparation for listing the Paducah house. I found it inside an envelope inside the cedar chest, inside a folded letter from Silas dated March 2008, 2 months after he had executed the ground lease and 6 months after he had established the post office box and the bank account. The letter was addressed to Loretta. It said, "Sister, I have made arrangements for the southern portion of the land. Details at the box in Murray. Key enclosed. Account number on key tag. The money will keep coming as long as the lease runs. 50 years. Tell Delia when the time comes. I was Silas's great niece. He had used my name. He had intended for me to know eventually. The time had come 11 years after his death because nobody had given me the letter when the time had first come. I read the letter 3 times. Then I turned the key over and read the account number written on a small tag attached to the key ring in Silas's handwriting. Then I got in my car and drove to Murray. The post office box was at a commercial mail receiving agency in Murray that had been operating at the same location since 1994. I presented identification and explained that I was the heir to the box holder's estate and that I was attempting to access the box to administer the estate. The agency manager, a woman named Bate who had been running the location for 16 years, looked at the key, looked at my identification, looked at the documentation I had brought establishing the chain of inheritance from Silas through Loretta through my mother to me, and said she would need to see the probate documentation establishing my authority as my mother's heir before she could allow access. I had anticipated this. I had the letters testamentary from my mother's estate in my bag because I was a forensic accountant, and I had learned long ago to bring every document that might be relevant when I was investigating something I did not fully understand. Bate reviewed the letters testamentary and allowed me to open the box. The box contained 11 years of accumulated mail, mostly HOA payment records. quarterly statements from the Callaway Pines HOA showing ground rent payments of $31,800 per quarter, $127,200 annually, deposited to an account number that matched the number on the key tag. There were also 2 letters from Howard Giles's company, Callaway Development Partners, dated 2011 and 2017, both addressed to the estate of Silas Vance, both noting that ground rent payments were current and asking whether the family wished to make any changes to the payment arrangements or discuss the lease terms. Both letters had gone unanswered because nobody had known to answer them. I sat in my car outside the mail agency for a while after I left. Then I drove to the bank whose name appeared on the account statements. I presented the same documentation I had given Bate. The bank's estate services officer reviewed everything, confirmed the account had been established by Silas Vance with a beneficiary designation to the estate of Loretta Vance, which had passed by operation of law through the estate chain, and told me the current account balance, $1,406,000. 11 years of ground rent, accumulated with interest, sitting in an account that had been correctly established and correctly maintained and correctly paid into by a developer who had been sending checks to a post office box for 11 years, and had apparently not found this unusual because the lease terms specified payment to that box, and the payments had been acknowledged annually by the box's existence and acceptance of the mail. Howard Giles had been paying a family that did not know he was paying them into an account that the family did not know existed for 11 years. He had done it correctly. That was the part I had not expected. I called an attorney before I called anyone else. Her name was Margaret Sowell, and she had practiced property and estate law in Western Kentucky for 24 years. I told her what I had found. She said, "Delia, let me make sure I understand. You have found a ground lease on 417 acres of family land, executed by your great-uncle in 2008, covering 212 acres currently developed with 38 homes, with 11 years of accumulated rent in an account totaling $1.4 million, and you are the heir through a documented chain of inheritance." I said yes. She said, "Who else in your family knows about this?" I said, "Nobody." She said, "Do not tell anyone until we have established the legal position completely." She was not being dramatic. She was being practical in the way that good attorneys are practical about family property matters, which is that the legal position needs to be clear before the family conversations happen, because family conversations about unexpected money are complicated, and the legal position needs to be established before the complications begin. Margaret spent 2 weeks doing the title research. She confirmed the 1947, 1953, and 1959 acquisitions. She confirmed the chain of inheritance through Loretta and my mother to me. She confirmed the 2008 ground lease in Deed Book 714, page 42. She confirmed that the ground lease was a valid recorded instrument that ran with the land and had passed through the same inheritance chain as the land itself. She confirmed that I was the current ground lessor, the owner of the land subject to the lease, and that I was entitled to the accumulated ground rent in the account. Then she called Howard Giles. Howard Giles was 74 years old, retired from active development and living in Murray. He had turned the Callaway Pines development over to the HOA's elected board in 2016 and had continued administering the ground rent payments on behalf of the lessor's estate, because nobody had told him to do otherwise, and the lease required him to continue paying. He answered Margaret's call on the second ring and said, "I have been wondering when someone would call." He said he had tried to reach the family through the post office box twice, in 2011 and 2017, without response. He said he had considered engaging a probate attorney to locate the heirs after the second unanswered letter, but had concluded that, as long as the payments were being made correctly, there was no legal urgency from his perspective, and that he did not want to create complications for a family that might have reasons for maintaining the arrangement as it was. He said he had continued making payments because the lease required it, and because the money belonged to someone and it needed to go somewhere. Margaret told him the situation had been resolved and that the lessor's heir had been identified and that we would like to meet. Howard met us in Margaret's office the following week. He was a quiet man, methodical in the way of people who have spent careers making things work on paper. He brought the full Callaway Pines file, every payment record, every HOA communication, every document related to the ground lease from the 2008 execution through the most recent quarter. The documentation was complete and accurately maintained. I am a forensic accountant. I reviewed every record he brought. They were correct. Every payment had been made. Every deposit had been accurate. Every quarterly statement had reconciled to the penny. Howard Giles had been correctly administering ground rent payments for a landlord he could not find for 11 years. Margaret asked him directly, had he ever considered not paying, given that the money was sitting in an account and nobody seemed to know about it? He said no. He said the money was not his. The lease required payment. He paid. He said it the way someone says something that they consider obvious, which is what I had not expected and which I thought about for a long time afterward. The HOA board of Callaway Pines was the next conversation. Margaret and I met with the board president, a woman named Sandra Mott who had been in the position for 3 years, and the HOA's attorney, in Sandra's living room in March 2022. The meeting had a specific quality of surprise because Sandra and the board had known they were on ground-leased land, but had understood the ground lessor to be a dormant estate that had not communicated with the development in over a decade. Learning that the lessor had been identified, was present in the room, and was a forensic accountant who had reviewed 11 years of payment records, produced a conversation that was careful in the way that conversations are careful when everyone in the room understands the stakes are significant. Sandra asked the first substantive question. She asked whether the identification of a new lessor affected the lease terms. Margaret said the lease terms were unchanged. The lease ran until 2058. The rent had been correctly paid. The only change was that the lessor was now a known and reachable party. Sandra asked the second question. She asked whether the accumulated rent in the account would affect the HOA's obligations. Margaret said the accumulated rent was the property of the lessor and would be transferred to the lessor's control. It did not affect the HOA's lease obligations. Sandra asked the third question, the one that the 38 families in Callaway Pines needed the answer to most. She asked whether the identification of the lessor created any risk to the homeowner's property rights. Margaret said it did not. The lease was valid and recorded. The homeowner's property interests were protected by the lease. The identification of the lessor changed the address to which communications and payments were sent, but did not change any substantive right of any homeowner. Sandra said, "Can I ask what you intend to do with the land?" I said, "Manage it the way Sila's managed it. Carefully and with attention to what it can produce over a long time." She said, "Does that mean you are open to renegotiating the lease when the current term allows?" I said I was open to discussions about the lease at the appropriate time. The current term had decades remaining. There was no urgency. The transfer of the accumulated account took 6 weeks to complete through the estate settlement process that Margaret administered. The account had been established with a beneficiary designation that, while somewhat informally documented given Silas's general approach to paperwork, was sufficient under Kentucky law to establish the inheritance chain. The $1,406,000 was transferred to an account in my name in April 2022. I called my father, who was Loretta's son and thus Silas's nephew, before I called anyone else. He was 71 years old and had grown up hearing about Silas's land in Callaway County without knowing the details of what the land comprised or what had been arranged regarding it. He listened while I explained everything. When I finished, there was a long silence. He said, "Silas always said the land would take care of us if we took care of it." He said it while he was farming it himself. I did not know he had found another way for it to take care of us. I said he left a letter in the cedar chest. My father was quiet again. He said, "I helped move that chest from Silas's house to your grandmother's attic in 2009. I carried it up the stairs myself. I did not know what was in it." I said, Neither did I until November. He said, "Delia, what are you going to do with the land?" I said I was going to manage it the way Silas had managed it. The 205 acres not covered by the lease, the northern portion, the mixed timber and the creek bottom that Silas had not included in the development arrangement, was productive land that had been unmanaged for 13 years. I hired a forestry consultant to assess the timber values. I hired an agricultural consultant to assess the creek bottom pasture potential. I engaged a wildlife management specialist because the transition from active farming to passive holding over 13 years had produced habitat changes that had value worth understanding. The 205 acres were in better shape than I had expected. 13 years of minimal human intervention had allowed the hardwood regeneration that timber harvesting interrupts, and the creek bottom had developed the kind of ecological complexity that takes decades to establish, and that I was not going to disrupt by returning to intensive agricultural use. I began managing it for timber value and wildlife habitat, a combination that produces sustained revenue without the extraction intensity that depletes what the land can give over a long time. The ground lease on the southern 212 acres continued as Silas had structured it. Payments arrived quarterly. I knew where they were going now. Sandra Mott and I developed a working communication that was professional and straightforward. She sent me the annual HOA financial reports as required under the lease terms. I reviewed them with the attention of a forensic accountant, not looking for problems, but understanding what the land was supporting and how it was being managed. The 38 families of Callaway Pines had been told about the lessor identification at a community meeting in May 2022. Sandra had handled the communication with the care it deserved. She had explained that the ground lessor had been identified and was now an active party to the lease, that this changed nothing about the homeowner's property rights or the HOA's obligations, and that the new lessor had confirmed her intention to honor the lease for its full term. She had answered questions for 90 minutes. The questions were mostly practical and the answers were mostly reassuring. One homeowner, a man named Gerald Ockhaffer, who had been in Callaway Pines for 8 years, had asked a question that Sandra relayed to me afterward because she thought I would want to hear it. He had asked what kind of person Silas Vance had been, the man who had owned the land and set up the arrangement that their community had been built on. Sandra had told him what she knew from the public record, which was that he had been a county resident all his life who had built a significant land holding through decades of careful acquisition and had arranged before his death for the land to provide for his family after he was gone. Gerald had said he set it all up correctly. The payments, the account, the letter to his niece. He just could not make sure the letter was found on time. Sandra said he had seemed moved by that. I thought about it too. Silas had set it all up correctly. The ground lease was properly executed and recorded. The post office box was properly established. The bank account was properly structured with the correct beneficiary designation. The letter was written and placed where it could be found. What Silas had not been able to control was whether the cedar chest would be opened at the right moment and by the right person. It had been opened 11 years late by a forensic accountant who knew how to read what she found in it. That was as close to the right person as Silas could have hoped for given the circumstances. I visited the Callaway Pines community in the fall of 2022. Not officially. I drove through on a Saturday morning and looked at what had been built on the southern portion of Silas's land. The homes were well maintained. The interior roads were properly surfaced. The community pond that Howard Giles had created during construction was clear and had the look of a water feature that had been properly managed for a decade. The common areas were maintained. The community was, by every visible measure, a functional and well-managed place where 38 families had made their homes on land that my great-uncle had purchased in 3 transactions over 12 years and had managed for 50 years before deciding what to do with it in the years before his death. He had decided to let it be used for something he thought was good and to ensure that the use would benefit his family for as long as the term ran. 50 years was a long time to look ahead. It was the kind of planning that required believing the future mattered enough to prepare for it carefully when the future was too far away to be certain about. I parked at the community pond and walked around it for a few minutes. The water was still in the November morning. Some of the homes had lights on. I could see a kitchen through one window, a woman making coffee, ordinary Saturday morning activity on land that Silas had walked when it was open pasture and timber in the 1950s. He had walked it differently than I was walking it. He had been assessing it, understanding its capacity, planning what it could become over a long time. I was walking it understanding what it had become. The cedar key tag with the account number was in my coat pocket. I had kept it. It was the clearest example of Silas's planning that I owned, a small physical object that represented 11 years of ground rent paid correctly into an account correctly established by a man who had trusted that someone would find the key when the time came and would know what to do with it. He had written the note to Loretta. He had put my name in it. He had been right that I would know what to do. I drove back to Paducah that afternoon. The Paducah house had sold in January. I had kept the cedar chest. It was in my office now, the same fire-safe place where documents that matter should be kept, because cedar chests in attics have a way of waiting longer than anyone expects them to, and the documents inside them need to be accessible when the time finally comes. Margaret Sowell had asked me, in one of our later conversations, what I thought Silas would have made of the way everything resolved. I had thought about that. I said Silas set up a situation where a developer paid rent correctly for 11 years to an account nobody touched because he was honest enough to keep paying even when nobody came to collect. I think Silas would have found that satisfying. She said, the honesty. I said, the correctness of it. He set it up correctly, and it worked correctly even when nobody was watching. That is what you hope for when you plan something that runs longer than you will. She said, and the forensic accountant who found the key. I said, Silas wrote my name in the letter. He thought I was the right person to find it. He was not wrong about that either. She said, no. He was not wrong about that. I drove home through western Kentucky in the late afternoon, with the account number on the key tag in my pocket, and the certainty that Silas had built something worth finding, and that I had found it, and that the land was being used as he had intended, generating income for his family and shelter for 38 others, and the kind of quiet ongoing return that comes from understanding what you own and arranging it carefully before you can no longer arrange anything at all. Hit the like button if you believe that careful planning is worth more than the effort it requires. Subscribe for more stories about property, inheritance, and the specific value of documents placed in the right hands at the right moment. And if you have a cedar chest in your family's attic that nobody has fully examined, examine it. Because sometimes what is inside has been waiting considerably longer than anyone intended and is worth considerably more than anyone expected. Framed thumbnail text. HOA ran MY land for 11 years. Subtext, $1.4 million was waiting for me.